candlestick pattern, how to read, understand, and use them to confirm a buy and a sell. Candlestick pattern, we use them to confirm a buy and a sell. And the best way for you to learn the candlestick pattern is in this way. Candlestick, they work in time, which is time, right? Number one, they work with time. Number two, they work with price. Number three, they what? Work with structure. So this is how the candlestick pattern are being formed, or how they work. Now, this is actually going to show you the candlestick or candlestick pattern that you should be actually looking for. Now, price, when we're looking at price, we are looking at what? We're looking at this price. We have so many prices that we actually can look at the market or the graph or the chart. Now, when you're actually trading, we have this many prices here. You can see that we have this red price here. Let's just pinpoint that red price so that you can actually be able to see it. This red price that we have over here. And also we have this green price over here that you can see, right? Now, these two prices in between we have what we call a spread. That is actually a make-up price by the broker. Now, this spread is like this, right? This spread is going to actually, these two lines, they are going to actually create the candlestick, right? Using what? Using this price. And now, this is what we're actually talking about here, which is price. And then also, we have what? We have time. Time, we're talking about what? Time frame. Time frame. In the time frame, many of us of traders who are new, have been there, or you've been trading, we are mostly confused with the time frame. As you can see here, we're at what? H1, which is 1 hour time frame. All right, that's H1, which is 1 hour time frame. Now, when we're actually talking about time frame, we're talking about the time the candlestick opened and closed. Meaning that here we have a candlestick that actually happening in 1 hour. Every candlestick that you can see here is in 1 hour. And the reason why it's actually in 1 hour is because the time here, I've changed it to 1 hour. Though, remember, we have our, actually, the time that we have in our real world, this time here. It is not actually the same when it comes to actually changing the form of how you want to see the candlestick in which time frame. So in this case, this candlestick, they are in 1 hour. So meaning that this candlestick on its own is 1 hour, and this one is 1 hour, this one is 1 hour. All the candlesticks are in 1 hour. These are candlestick, they're not candlestick pattern. However, if right now we're talking about candlestick pattern, we're talking about a behavior. We're talking about a behavior of how a certain thing reacts to certain things, or to a certain environment, whatever factor that is affecting that, it's actually reacting towards that. In this case, if right now we can make an example, which is quick and short. Right now, if you're actually someone who's in business of selling, you will understand that during this time, or during a time where employees are getting paid, you're going to actually make more sales, right? So this is actually all about that. Now, when we're looking at the behavior, we have to understand the market creates or it has this behavior of that it will go up, but then eventually it will go down. And there are many factors that are affecting that, which is we can look at the umbrella of what? We can look at the umbrella of what? Of supply and what? And demand. Okay? So these are the actually principles that they govern the graph or the chart to go up and down, right? So we mostly understand what supply is and demand is, right? Okay, we're not going to be looking at that now. If you're confused, please leave a comment in the section below so that I can actually assist you much better. Now, we talked about time, which is time frame here. We can see that we have this time frame over here. All right. And also, we're talking about what? Structure. Structure, we're looking at what? We're looking at the volume. We're looking at the volume, right? And structure, we can actually add many things under volume. So under volume, we're looking at the orders. All right, we're looking at the orders that they have been filled. Orders that they have been filled. So in this case, if you can see, we have this candlestick over here. This candlestick that is colored in green, we call it a body, which is, it has what? It has a volume. And the volume represents the transaction that took place in 1 hour, which is, we're in 1 hour time frame. And also we have the price that happened in this candlestick, right? Now this candlestick has a volume, which it has orders. Just like when you have to start a business, you're going to have what? You're going to need orders, which means you need people to buy. So which means we're talking about orders. Now orders, remember, this candlestick will have what? Will have an input. An input, we're talking about the order or the startup of the market, because this graph or this chart, it will actually start like this, going up with this candlestick, and there is no any other candlestick pattern that you can use to confirm why it actually went up, because you do not own this market. You do not own this market, right? So if you do not own this market, you cannot actually influence how it moves from here to there, right? Which is here. And also, when we're looking in terms of the price, right? The price that I've talked about, I want to mention something here. We're looking in terms of open and in terms of what? I believe some of you already understand. And we're looking in terms of what? Open and close. We're looking in terms of what? Open and close. We're talking about the price over here. This is the price. This is the volume. And the volume, somehow you learn that we have what we call a liquidity. Liquidity, we're talking about the flow of cash. And the flow of cash, you'll see it by what? By this candlestick showing you a momentum. Momentum represents the fast movement in a given time. And the given time is what? Is H1 in this case. So that is why we have a volume. And also, when you're looking at time frame here, this time frame represents the candlesticks. I've already mentioned that. All right. Now, when you're looking at this is actually what? Creating the candlestick pattern. Now, the candlestick pattern, we have what? We have the candlestick pattern for sell. We have the candlestick pattern for buy. And this is where the question of when to buy, when to sell come in play. Some of you already asking it. So for you to understand when to buy, when to sell, you need to understand that candlestick pattern, we have what? All this creates candlestick pattern. And the candlestick pattern, which is in turn creates, let me share with you. Creates what? Creates a combination. Let me just put combination. Creates a combination. Sorry for my handwriting, but that's combination. In return, this is creating the combination. And the combination, remember the price here, we have what? We have a spread in between. We talked about spread. The spread is actually offered by the broker, and the spread will affect the opening of a candlestick and the closing of a candlestick. Also the volume. Reason why it's being affected is because of the broker that you'll be using. And it's very good to actually use brokers that are actually trustworthy and which are good. Now, when we're talking about combination, we're talking about what? We're talking about the candlestick pattern. Candlestick pattern, we can have 1, we can have 2, we can have 3, we can have 4, we can have 5, we can have 6, we can have 7, we can have 8, we can have 9, we can have 10. All right? And these are patterns from, let me mention here, from 4 to this candlestick pattern. This is from my actually experience. And for you to learn from 4 to 5, 6, 7, 8, 9, 10, this is where actually I will offer you a mentorship lesson or a course or a tutorial, private tutorial classes for you to learn and understand the combination, because the combination are so much complex that you need to understand them, how they form, and then how you can actually use them. All right, now when we're looking at the pattern, we have 1, we have 2, we have 3, and the 1 and 2 and 3, I'm representing that this is representing that we're talking about candlestick. Candlestick can be 1, candlestick, can be 2 candlestick just like this, can be 3 candlestick just like this, right? And these 3 candlestick, remember this 1, 2, 3 candlestick, they represent that one candlestick will actually give you what? Give you a reversal. It doesn't matter whether you're going to be selling or buying. But then the most important part is the color of the candlestick. If right now the candlestick is up here, it means that you'll be looking for candlestick that is red, so that you can confirm that is 1, it's for sell. And for the one of that is 2, the one that is 2, the last candlestick, you'll expect what? You expect it to be red. And also with the 3, you'll expect the last one to be red, meaning that it's showing you that it's actually going down. So when it comes to actually making confirmation, remember this 3 will create more combination. Though there are 3, but it will create more combination. How the system creates this combination to make sure, or I'm not sure, but I believe, I trust that it's actually giving the fairness that if you do not do the work correctly, you're going to actually experience more losses. That is why it will create more combination, and this combination, they'll be almost the same as like this one. So you'll actually get in, lose, get in, lose, get in, lose, though the combinations are actually correctly, but there is something wrong in that space of time. Then when you're looking at this candlestick pattern, once you have actually this candlestick pattern confirmation, you can easily sell here and place a stop loss here, sell here, and it's the same with the buy. The last candlestick that actually has to go up, it must be actually green. So in this case, let me share with you the green. That okay, right now we have this candlestick that was going down like this, and then this is actually what? Green candlestick, meaning that it's actually moving up. And then another, this is the number 1, number 2, these are 2 candlesticks. The last one must be what? Must be green. And also it's the same thing that applies. So if we take a look at this chart here, or this graph here, we can see that this last candlestick that was actually going down was what? Was red, right? Was red. So that represent what? That represent that this candlestick, we can actually place what? Place a sell here and our stop loss above this level. However, you must be mindful that this space, the space from here to this point, we have what? We have points. And these points are being calculated because of what? Because remember, we talked about what? A price. So we'll be minusing this price and this price that you actually went in with the buy. So if you minus this one and this one, you will get what? You will get a 0.0 something, right? And then if you minus these 2, you'll get that 0.0 something. You can take that number that you get, maybe let's say you get 250, you times it by the lot size that you actually open to actually find the value of the lot size, and then you get the value of that points. So you'll get, maybe let's say it's $10. So meaning that from this point to this point, you are risking $10. So in that case, you actually need to what? You need to be actually careful how you actually risking. So it's better to actually use a smaller time frame, such as 15M, 5M, or even the smallest time frame that are in between, such as 10 minute, though I don't recommend 10 minute, 2 minute, maybe say 3 minute. So those are the time frames that you actually can use. And keep in mind, when you're using this time frame, such as 5 minute, 2 minute, 3 minute, 10 minute, or more time frame, you're going to be confused because you're going to get more confirmation entries, though they're not actually giving you the correct entry. So it is best to reduce. That is why you can actually cancel this time frame, and only leave 5 minutes, 15 minutes. And those are the 2 time frames that you actually can think of using. So for now, I believe you have an understanding how you can actually risk from here to there, which is in between. We'll have what? We'll have points, and these points are what? Have value. So this candlestick pattern, they actually what we're talking about entry. So once you have this candlestick pattern, you'll need to what? You'll need to have alignment. And on lesson 2 on candlestick pattern, I will actually share more information about the candlestick pattern.